When you think of budgeting, do you feel more stressed out than excited? If so, you're not alone. Creating a monthly budget can seem overwhelming, but it doesn't have to be. In this video, we'll show you how to create a monthly budget that actually works. You'll want to stick around for our best tip at the end. It's one you won't find anywhere else. So let's jump in. Step 1. Identify your income. Before creating your budget, take some time to identify all sources of income. Don't forget to include any regular financial gifts from family or friends, as well as government assistance like child tax credit. Having a complete picture of your income is important because it allows you to accurately track where your money is going. Step 2. Calculate your net income. Once you've identified all of your income sources, calculate your net income. This is your take-home pay after taxes and other deductions are taken out. To find your net income, look at your pay stub or check your bank account. For people who are self-employed or have multiple sources of income, calculating your net income may involve reviewing documents like profit and loss statements, 1099 forms, and W-2 forms. Step 3. Track your expenses. Now it's time to track your expenses. Start by categorizing them as either fixed or variable. Fixed expenses stay about the same each month and include things like rent or mortgage payments, property taxes, insurance premiums, student loan payments, and car payments. Variable expenses change each month and include things like groceries, gas, clothing, and dining out. After you've categorized your expenses, it's time to start tracking them. A great way to do this is by using a budgeting app. Many budgeting apps allow you to connect your bank accounts and credit cards so that your transactions are automatically categorized and you can easily see where your money is going. If you prefer a more hands-on approach, you can also track your expenses using a spreadsheet or notebook. Once you've tracked your expenses for a few months, take some time to analyze your spending habits. Are there any areas where you can cut back? Can you negotiate lower rates on things like your cell phone or internet bill? By taking the time to analyze your expenses, you'll be able to find areas where you can save money and free up more of your budget for things that are important to you. Step 4. Create a budget plan. Now it's time to create your budget plan. There are many different ways to budget, but we'll walk you through one of the most popular methods. This method is called the 50-30-20 budget. With this method, you'll allocate 50% of your net income towards needs, 30% towards wants, and 20% towards savings and debt repayment. Needs are things like housing, transportation, and food. Wants are things like entertainment, dining out, and clothing. Savings and debt repayment include things like retirement contributions, paying down student loans, and saving for emergencies. While this method is a great place to start, it's not one size fits all. For example, if you have high interest rate debt, you may want to allocate more of your budget towards paying it down. Or if you're saving for a down payment on a house, you may want to allocate more towards savings. The key is to find a budget that works for your unique situation. Step 5. Make adjustments as needed. Once you've created your budget plan, it's time to make adjustments as needed. Life is full of surprises, and your budget should be flexible enough to accommodate them. For example, if you have an unexpected expense, like a car repair, you may need to reallocate money from other categories in order to cover it. Or if you receive a raise at work, you may want to use some of that money to boost your savings. The key is to review your budget regularly and make adjustments as needed. This will help you stay on track and reach your financial goals. Also, don't be afraid to experiment with different budgeting methods until you find one that works for you. Here's a quick tip. Create a sinking fund for irregular but predictable expenses. What's a sinking fund? It's a savings account that you use to save up for irregular but predictable expenses like car repairs, home maintenance, holiday gifts, and vacations. By setting aside a little bit of money each month into your sinking fund, you'll be prepared when these expenses inevitably arise. And trust us, these expenses always seem to come up when you least expect them. A study by Lending Club found that 64% of Americans couldn't afford a $1,000 emergency expense. Don't let yourself become part of that statistic. A well-funded sinking account will give you peace of mind knowing that you re-prepared for whatever life throws your way. If you're still struggling to stick to your budget, it may be helpful to talk to a financial advisor. They can help you create a budget that meets your specific needs and goals. Plus, they can provide valuable tips and advice on how to stick to your budget. So don't wait any longer to create a budget that actually works. Use the tips above to get started today. You'll probably see that creating a monthly budget isn't as hard as you thought it would be. But what about sticking to it? Well, that's a whole other challenge. According to a report by Fidelity Investments, nearly 1/3 of Americans spend more than they earn, and 41% have no idea how much they're spending. Sticking to a budget can be tough, but it doesn't have to be. We'll tell you how to stick to your budget and reach your financial goals without making sacrifices. In today's video, let's go over 5 ways to stick to your budget. While creating a budget is an important step towards achieving your financial goals, it's equally important to stick to it. Here are 5 tips to help you stick to your budget. Tip No. 1. Set realistic goals. One of the biggest mistakes you can make when creating a budget is setting unrealistic goals. For example, if you're used to spending $500 a month on dining out, it's not realistic to suddenly cut that expense to zero. Instead, set realistic goals that you can achieve. For example, aim to cut your dining out expenses to $250 per month. You'll be more likely to stick to a budget if you set realistic goals that are achievable. Tip No. To automate your savings and bill payments. A great way to stay on track with your budget is to automate your savings and bill payments. By automating your finances, you'll never miss a bill payment again, and you'll be able to save money without even thinking about it. Most banks and financial institutions make it easy to set up automatic transfers for savings and bill payments. Tip No. 3. Use cash for variable expenses. Another way to stay on track with your budget is to use cash for variable expenses. Using cash can help you stick to your budget by limiting impulse purchases. Set a weekly or monthly cash budget for variable expenses like groceries, gas, and entertainment. By using cash, you'll be less likely to overspend. Plus, it's easy to track your spending when you're using cash. Simply tally up your cash at the beginning and end of the month to see how much you spent. Tip No. 4. Review your budget regularly. It's important to review your budget regularly to ensure that you're on track. Set aside time each month to review your budget and make any necessary adjustments. This will help you stay accountable and make sure that your budget is meeting your needs. If you find that you're consistently overspending in certain categories, adjust your budget accordingly. You may also want to track your spending for a few weeks or months to see where you can cut back. Tip number 5. Reward yourself. Finally, don't forget to reward yourself for sticking to your budget. It's important to celebrate your successes, no matter how small they may seem. When you reach a milestone, treat yourself to something special. This will help you stay motivated and make sticking to your budget a habit. So there you have it. By following these tips, you'll be on your way to sticking to your budget and achieving your financial goals. Remember to set realistic goals, automate your savings and bill payments, use cash for variable expenses, review your budget regularly, and reward yourself for staying on track. Best of luck and happy budgeting!